The risks are high, and they have risen because of the policy uncertainty. We still do not have a complete picture about the regulatory reform. We do not have yet a complete picture of how Europe will handle its crisis. There is a great challenge for the countries themselves who need to restructure, and also challenge for the policy makers who need to define their strategy fully.
Confidence in the European officials to successfully tackle the debt crisis is waning. A recent Bloomberg survey says about 3/4 of the people don't believe that any kind of rescue package is necessarily going to save the crisis from worsening, and that Greece could actually default. What's your view?
Well, the rescue package is a very dramatic one. The size is unprecedented, and its intent was to ensure that the various countries that are in potential difficulties have enough resources, enough financing to service the debt for several years. So therefore, the issue of default per se because of lack of financial resources was supposed to be taken off the table. And yet, markets are not fully confident. And the reason is that they say, you know what? Servicing the debt is a very important objective, but I want to make sure that after the period, after the 2 years, there is enough economic growth that will be able to enable those countries to return to the market without the need to rely on the support. And this test is still ahead of us.
Which scenario, though, with Greece do you see playing out? Will they default?
You know, if you look at some of these countries, they have run budget deficits as if there is no tomorrow. And a budget deficit for 1 year is a one-year party. A budget deficit for several years is a very significant debt. And this debt has to be both serviced and paid. Markets are therefore getting nervous. The markets must get a clear message that the trajectory for the future is no more deficits of the type that we have seen.
Let's cross the Atlantic and the challenges at hand in Washington and the financial reform package. Will the capital requirements be too great for commercial banks, for example, with the separation, if they are forced to have the swaps units separated from commercial banking?
Well, capital requirements will need to be higher, because that's the way in which you secure a more safe system. What is important is not whether we are going to have tighter standards or not, but rather, are we going to have standards that are more stringent in the United States than elsewhere? I repeat, in a world of globalization, you really must have a plain level field to make sure that we are not being disadvantaged.
Speaking of level playing field, is the yuan significantly undervalued?
Well, I believe that as we will look down the road into the future, we will see a stronger Chinese currency. The question is, how is it being brought about? I think that the current strategy of bringing about the rebalancing through expansion of domestic demand, through a reduction in savings, through a reduction in the need to save, through the development of pension system, social security system, and the like, is the correct way. If you're going just to focus on the exchange rate alone, we have seen in the past it was futile.